Guys, welcome to our first time homebuyer workshop. There's going to be some people that are going to be jumping on right now. I'll just go ahead and get started with the introduction. My name is Voltaire Lepe, CEO of Lepe Tendwell Properties, and I'm a real estate agent. And the reason why we put these workshops on is pretty simple. You know, we believe in home ownership. We believe in what it does for the purchaser, the owner of the property. I've been in real estate 18 years, and I've seen what real estate does firsthand for a lot of my clients, past clients, current clients, and also in my own personal portfolio. So I believe in it. It's very powerful. So the objective today is just to educate you on how everything works, how the home buying process works from A to Z. We're going to be covering the transactional stuff as far as someone who wants to buy, what steps they have to take. We're also going to be covering the financial side of things. A lot of people don't know how loans work, the different types of loans. How do you even qualify for a loan? I think once you find out the details about qualifying for a loan and how the banks basically rank you or determine whether they're going to give you a loan or not, I think that in itself is a huge step, because a lot of us find out that we are qualifiable. We can qualify either now or in the future. Okay, so we'll get started right away, start going into the different steps of buying a home. And then from there, we're going to have a guest speaker jump on and talk about the loan side of things, all the different things that lenders look at, and down payment assistance programs and those sort of things. So at any point, this is pretty interactive. At any point, if you have any questions, feel free to type them in the chat box, or feel free to unmute yourself and you can go ahead and ask the question, because I'm sure there's going to be other people that have the same question. Okay, great. All right, so let me share my screen here. Okay, can everyone see my screen? I believe you can, so I'll just go ahead and start it. So first thing to know about buying a home. So there's real estate agents out there, and there's two types of agents. There's seller's agency and there's buyer's agency. When you go to buy, you're going to have a buyer's agent. So your real estate agent owes you a fiduciary duty to the buyer. What does that mean? That means that they got to represent your best interest first before anyone else's best interest, before the seller's best interest, before their own best interest. Okay, that's what fiduciary means, and it's a legal term here in California. So let me just go ahead and play this. Step one is the home loan pre-approval process. I won't steal Alfonso's thunder. However, I will just give you a couple of basics. So this is what's going on with interest rates right now in the US. So historically, as you can see here in the 1970s, rates averaged at 8%, okay? Oops. They averaged 8% on average in the 70s. In the 1980s, they averaged 12%. In the 1990s, 8%. 2000 and 2010, they averaged 6.2%. And then today they're averaging, well, this is a few months old, so this no longer exists. But right now they're averaging 3%, believe it or not. So there's home buyers that I know right now that are getting 2.75% interest rates, 3% interest rates. That's insane, okay? Just so you understand that how crazy that is. When just in 2010, they're at 6%. And over the last 10 years, they've averaged about 4.25%. So I think that's, you know, super important to know that right now if you get a mortgage, it's going to be historic all-time lows, okay? All right. Rates, they could always go up, they could always go down. Right now they're down. Historically, during election years, they are low because the current president during an election year always wants to get reelected. So everyone's projecting that they're going to go back up after the election. Okay, so that's interest rates. Let's talk about the different types of lenders out there. There's 3 different types of lenders. There's a mortgage broker, there's a large direct lender, and there's a private direct lender. So a mortgage broker is someone who isn't going to give you the loan directly. They're just going to broker it. Their fees might be a little bit more expensive than a direct lender. Okay. Then you have a large direct lender and a private direct lender. A private direct lender is going to be someone like a bank you never heard of. Okay, they're not going to be a Wells Fargo or a Chase. They're going to be a bank that you never heard of, and they give you the money direct. A large direct lender is someone like these guys. Okay, large direct lender is Wells Fargo, Navy Fed, Citibank, Bank of America. These are people that you have your checking accounts or savings accounts with them, and they do all kinds of different loans. They do car loans, student loans, mortgages for your home. So they have income streams coming from different avenues. Okay. Now the difference between the 3 lenders, again, a private direct lender, they're not going to give you a mortgage broker, they're not going to give you the loan directly. A private direct lender, they compete with large direct lenders in a way that a private direct lender, the only way that they make income is through doing home loans. So they have to hustle. They have to work nights, weekends, answer their phone, etc. With a large direct lender like these guys, they have niche products because they make money through other ways. They make money through car loans. They make money through student loans. So they only have a few products that they're really good at. And a lot of other products for first-time buyers, they may not carry. Does that make sense? So that's the difference between the lenders. Every lender is different. So whenever you do want to buy, you got to talk to your agent about your needs and how much money you have, and then they could refer you to the lender that they feel has the best programs for you. Okay. Does anyone have any questions on the types of lenders? If so, please ask. That way we could, we could all hear the answers. Any questions? Okay. I'll move on to the types of items that are covered in your mortgage. Okay, so you have your principal, interest, taxes, and insurance. So these 4 items are covered in your mortgage payment. So whenever you make your mortgage payment, you're paying principal on the loan, paying it down. It's almost like a piggy bank. You're saving money because if you have, let's say, a $500,000 mortgage, after the first month, you only owe, let's say, $499. And then after the second month, $497. And then you just paying it down little by little. When it comes to rent, you're not paying anything down. You're paying down the mortgage for your landlord. And, so you don't have a built-in savings account, okay? The next thing it covers is interest. Obviously, the bank's going to charge you interest to let you borrow that money. It covers the insurance. It covers the taxes of the property. So whenever you buy a home, you want to make sure with your lender that it covers the principal, interest, tax, and insurance, okay? Cost of financing a home. So you have your purchase price, you have your down payment. So down payment is a percentage of the purchase price. Sometimes you put 0 down, sometimes you put 30% down. And then interest. Interest is the cost of borrowing the money. And then you have your closing costs and your fees and expenses paid by the buyer at the close of escrow. So whenever you buy a property, let's say you're buying it for $500,000, it's not just 500,000 that you're actually paying for the property. You're paying 500,000 plus closing costs. There's a lot of companies involved when you buy a home. So there's escrow companies here at the bottom if you want to read it along. You have escrow companies, title companies, lender fees, real estate fees, notary fees, HOA fees, if any. So the usual cost of fees is about 2% of the purchase price. So if you're buying a property for 500,000, you want to tack on, rule of thumb, right? You want to tack on another 2%. So that's $510,000 that you're paying for that house because there's fees involved, okay? If there's any questions at any time, feel free to just interrupt me, ask me the question. All right, so we're moving on. Before we move on to step 2, is there any questions that you have about the loan part of things? Because we're leaving step 1, which is the pre-qualification process or the home loan process. Any questions, anyone? Claudia, is anyone in the chat box? I can't see on my end.
No comments yet in the chat box.
Okay, great. Thank you. All right, so now we're moving on. Step 2, we email you all the properties that match your exact home buying criteria with our exclusive VIP hunter service. So whenever you hire your real estate agent, one of the first steps is that you're going to sit down, you're going to tell them exactly which type of properties you're interested in. So remember, we're already done with step 1, which is qualifying for the loan. By the way, qualifying for the loan might take you a few days if you got all your stuff in order, or it might take you a year because, or longer, because you sit down with the lender, they take all your information and they might say, hey, you don't have enough for a down payment, or you don't have enough for your closing costs, your credit score isn't good enough, you don't make enough income, or you have too much debt. That's okay, because the whole point of sitting down with a lender is for them to educate you on where you're at right now and what steps you need to take, whether it's pay off debt, whether it's get a pay raise or increase your FICO score to get you where you want to be. Okay, that's the whole point of sitting down with a lender. So anyways, step 1 might take you, again, a few days, or it could take you a year or longer to get qualified for a loan, okay? But anyways, after step 1, then step 2 is when you sit down with your real estate agent, and then they take down your criteria. They go, oh, well, congratulations, Susie Joe, you qualify for a $500,000 purchase. What areas do you want to live in? Then you break down the areas, how many bedrooms and baths, the square footage, do you want a yard, do you not want a yard? And then your agent's going to start sending you properties from the entire marketplace, including short sales, foreclosures, for sale by owners. And then at that point, you start looking for homes in person, okay? If anyone's interested in finding out the difference between the different websites, Zillow, Redfin, the multiple listing service, the only difference is this: when you go directly to a real estate agent, they're going to give you direct access to the multiple listing service. Multiple listing service is where all the properties for sale are hosted. As a realtor, I have access to any property on the market from any real estate companies, and they have access to all of mine. So it's a sharing service. From that sharing service, companies like Zillow and Redfin and Trulia and Realtor.com, they get third-party access to those listings as well, okay? Takes a little bit longer, it's maybe not as accurate. So the most accurate information you can get is directly through your realtor, okay? Step 3, you're gonna get the property that you want, because your realtor should have knowledge of the current marketplace. So this is an appreciation chart. This shows you exactly what's going on in the marketplace with appreciation. As you can see here in the 1987, 30 years ago or so, prices have been going up since then. You could notice that there's a sharp drop in 2006 7 and 8, that's when prices just dropped completely. And that's when everybody was panicking. And I remember during that time, everybody was scared. Everyone was saying real estate prices are never going to come down. Believe it or not, if you look at this chart, I had clients in 2012 and 13 up to 2015 that were saying, oh no, I'm waiting for prices to drop. They were afraid to buy in 2012, 2013, 2014, and they didn't buy, some of them, unfortunately. And what happened? Prices just went up. And right now, prices are at all-time highs. So some of the questions you may have is it a good time to buy? What's going to happen with the real estate market? What's going to happen with interest rates? Okay, so we'll touch on that in a bit. But this is showing you right now what happened over the last 30 years with real estate prices. And I think we could all agree that real estate always goes up over time. Now you're looking at inventory levels. So inventory levels are all-time lows right now. So what does that mean? That means that there's a lot of sellers and there's a lot of buyers and there's very little sellers. Okay, so there isn't enough sellers for all the demand that the buyers are pushing on the market. So right now it is a seller's market. What does that mean? It's a seller's market because they dictate what they get for their property. So they're pushing the values up right now. I'll give you guys, you guys have something to write with, write down these two numbers, okay? I want you to put July 2019, and then right next to that, put 7,200, 7,200. And then right below that, I want you to put July 2020, and I want you to put 4,500. So what do those numbers mean? Well, those numbers mean that right now there's 4,500 homes on the market for sale. Last year, 7,200 homes on the market for sale. So last year, there's a lot of inventory. There's a lot of homes for sale. This year, there's a lot less. How much less? Over 60% less homes to choose from. So if you're looking to buy in this market, you're going to be looking at 61% less choices than you would have had last year. So what happens, guys, when there's low inventory, meaning not a lot of homes for sale? What happens when interest rates are very low, 3%-ish? And what happens when there's a high demand of buyers? Well, it pushes prices up. So that's what's been going on in this market is prices are getting pushed up. So I don't know if there's a comment or there's a question. If there's a question, Claudia, if you could read it out.
Yes, let me see. So now is the time to sell? It's the question.
If you have a house to sell, you should probably, and you want to sell or you have a reason to sell, then now's the time. In the same breath, interest rates are so low that some of the, a lot of really smart and rich people are investing in 30-year mortgages. What does that mean? Well, you could borrow money right now so low for a mortgage that a lot of people are getting mortgages. Either they're buying houses with mortgages or they're refinancing. So my real estate portfolio, I had to run numbers on my real estate portfolio over the last week just to see which properties I want to refinance. What refinancing means is swapping out a new mortgage for the old mortgage. So I was running some numbers, and if I just swap out new mortgages for the old mortgages, my cash flow every month would increase by about $3,000. So I would make $3,000 extra every single month by just swapping out new mortgages or getting a new loan and replacing the old loan just because interest rates are so low. And my previous mortgages or my current mortgages, I mean, they're already low enough, but with rates dropping so much, I have no choice but to make some moves. So to answer your question, if you have a house to sell and you're thinking about selling, then you should. You can reach out to your favorite Lepe, Tendwell real estate agent, and they'll go ahead and tell you what your property's worth and what you could get for it in this market. So again, in the same breath, it's a good time to get a mortgage 30-year fixed, because your monthly mortgage payment in a lot of cases is very close to whatever you would be paying in rent, because your rates are so low. It's going to be a little bit more expensive than rent, but over time, it's going to be a lot cheaper to buy a house right now. Okay, great question. Thanks for asking that. Any other questions you see in there, Claudia?
None so far.
Okay, great. So I'm going to skip over the different types of loans, because we're going to let Alfonso handle that as soon as he jumps on. This is pretty interesting. This is actually a little bit outdated, but just a few months ago, 83% of all the sales were traditional sales. Very few of the sales, 17%, were distress, meaning a divorce, like a court order sale, someone's getting sued, someone passed away, short sale, or foreclosure. So I checked about a week ago, and in San Diego, there was, I think it was 36 properties out of the 4,500 homes. So out of 4,500 homes, there was 36 properties that were either foreclosure or short sale. So there's a lot of buyers still right now that are saying, well, I'm only going to buy a property if it's a good deal, if it's a foreclosure or short sale. Well, there isn't any out there. There's 36 homes out of 4,500. And if you're thinking about buying something that's distressed or at a discount, I hope you have cash, because they're not going to accept your loan in this type of market where it's so hot. So that really doesn't exist, but there's a lot of traditional sales at fair market value that you could purchase right now. Okay, so just want to make that clear as to the type of market that we're in. Any questions about that?
There's no questions, but there's one, not about the type of listings, but what would be the ideal credit score to get a 3% interest rate on a loan?
Good question. I'll let Alfonso answer that when he jumps on. The higher you could get into the mid 700s, the better. But with some different types of loan programs, your FICO score may not matter. So there's some type of programs out there where even if you have a 700 or 600, you get the same rate. But we have people right now that have 700 FICOs that are getting stuff like 2.75%. So I'm assuming if you have something in the 600, you could probably get like a 3% rate, which is pretty incredible. Good question. Thanks for asking that. Okay. Okay. So your agent, their goal should be to secure you the best financing and lowest rates and terms. Even though they don't do loans, they can introduce you to the best lenders out there. And second thing that they should, their goal should be is to negotiate the lowest price and the best terms in the purchase. And the third thing is to meet your home buyer needs with the least amount of hassle. Okay. All right. So this is a big one. This is a big question or concern or question mark that a lot of buyers out there have when they go into the buying process, especially after they complete step one, which is getting qualified by a lender. So what's escrow? How does it work? You probably heard this term a lot. So what escrow means, whenever somebody says, hey, I'm in escrow, if a buyer says that, that means that they were home shopping, they found a home, and they're no longer looking for a home. They're in escrow. Whenever you hear a seller say, I'm in escrow, that means that they have their house in the market, but they found a buyer. Therefore, they're in escrow and their home isn't for sale anymore. So escrow is an actual company that the buyer and seller contract. So as soon as the buyer and seller come to terms on a contract and they sign an agreement saying that the seller is going to sell it to the buyer for predetermined price, they get that contract, they send it over to a company called escrow. Escrow's job is to make sure that the exchange happens. Okay, so the buyer gets the money, sends it over to escrow. Escrow makes sure that the seller gets the cash at the close of escrow. And then at the same time, escrow makes sure that free and clear title to the property is conveyed to the buyer. Okay, so they're the middleman. They're the ones that make the exchange. Give the buyer the keys to the house with clean, clear title, and give the seller the cash from the buyer and the buyer's lender. Okay, so that's what escrow does. Any questions on that? Okay, so now let's go over the escrow timeline. So the escrow timeline reveals exactly what happens in the process of getting your keys. Before you get your keys, what happens? Well, between day 1 and day 3, that's when the buyer has to put their earnest money deposit into escrow. What does that mean? Well, your earnest money deposit is almost like a rent deposit. You're putting it into escrow, and you're basically just holding your spot. So with that money, it holds your spot. It's like a rental deposit. Pretend when you rent a home for a year, you put your deposit in, and then when you leave after a year, as long as the property's taken care of and everything's fine, you get your deposit back. So that's basically what this is for the buyer. It holds your spot, and then at that point, the seller feels comfortable, takes his property off the market once you put the deposit into escrow. Okay. Within 7 days, the seller discloses to you what's wrong with the home. So within 7 days, the seller says, "Hey, look it. Someone passed away in my home 2 years ago. The roof leaks whenever there's rain. The neighbors are always throwing parties. I can't hear myself think." So whatever's wrong with the home, they have to disclose to you within 7 days per California state law. Within 10 to 17 days, that's your contingency period as a buyer. So as a buyer, you could always cancel the deal. You could always say, you know what, I did my inspections and I don't like the condition of the home, I'm canceling. Then at that point, you could cancel, you get your deposit back. At the same time, if the seller tells you something that you don't like about the property, let's say someone passed away 2 years ago in the property and you're not about that life, you could always cancel and you'll get your deposit back. Okay, so that's what contingencies are for. Contingency is literally your right to cancel the deal. That's a contingency, and you have several of them. So you could always cancel if your loan doesn't go through or if the property doesn't appraise. There's different types of contingencies that you have as a buyer. And then the finish line, 30 to 45 day close of escrow. Right now it's closer to 21 to 30 day close of escrow. So what does that mean? That means that if the escrow period is 30 days, at 30th day, you should get your key. Okay. Now, looking below, you'll see that there's some added cost towards the bottom. There's going to be out-of-pocket expenses during the escrow period. Why? Well, because you need to hire an appraiser, to issue your bank an appraisal, telling your bank that it's worth $500,000, the property. That's going to cost you about $550 on average. You're going to have to hire a physical home inspector. Why? Because you're buying a house. You know, you're probably not a contractor. You're probably not a home inspector. So you need an expert to tell you what's wrong with the home. So you're going to hire a physical home inspector to go out to the property and inspect the home and give you a detailed list of what's wrong with the home. So they might tell you, hey, look at the roof. You have 2 years left on it. The water heater doesn't, it's at the end of its expected life. The furnace doesn't work. There's foundation issues. The windows were improperly installed. So they're going to go through underneath the house, check the electrical, plumbing, foundation, and tell you what you're buying. And the termite inspection. Termite inspection might cost you $100. A lot of times the seller pays for it as well. So these are some out-of-pocket expenses when you go to buy your home. What questions do you guys have about this part of it, or any part so far that we've covered? Okay, anybody in there? All right, so we have, if there isn't any questions, we can move on and we could go over the loan process. And we have Alfonso. Alfonso, do you want to mute yourself?
There we go. Can you hear me?
There we go. We can hear you. Perfect.
Awesome, man. Thank you guys so much for having me. My name is Alfonso. I've been mortgage for 17 years, helped a lot of families buy a home. Thank you. It's quite an honor to be, here with the Voltaire and Lepe Tendwell family. So I'm gonna, before I share my screen here, if you allow me to share my screen, Voltaire,
Yeah.
I will share it here in a second. What happened here?
Hold on.
Okay, I'm going to talk to you guys about the different loan programs that we specialize in. Okay, we do a lot of down payment assistance programs, a lot of first-time home buyers, and today I'm going to cover, top 3-4 programs that we cover in a bullet point. I'm going to give you guys some examples. I want to illustrate you guys what a payment looks like if you decide to buy a home. Okay, so without further ado, give me one quick second. Let me put her in slideshow. And
share it right now. I can't see on my screen.
I'm going right now. Hold on. Share. Host disabled participant screen sharing.
Okay, let me get you right now, because on my end, what are you seeing on the screen? Can you tell me what you're seeing?
Host disabled participant screen sharing.
Hold on a second. Okay, here we go. I can see now. Back in business. Hold on. I couldn't see my mouse for a little bit. I got you. Are you drinking coffee right now, or what are you drinking?
Dude, I'm drinking coffee, homie. I said, wake. I'm just kidding.
Let me see. Make co-host. There we go.
Cuñada came to visit us, and she always makes me some bomb coffee. So I'm like, sure.
Oh, café de la olla?
Cafe. Yeah, she makes. I don't know. She makes it really good, man.
Oh, okay.
I'll bring you some. All right.
Yes, sir.
So, okay. So first program. Let me see. Let me go back. Okay. First program I want to talk to you guys about is the state. This is you buy anywhere in the state of California. It's not limited to any area. Okay. It's called CalHFA. It's a down payment assistance and closing cost assistance. Okay. That program, it says it's exclusive for first-time home buyers. So what's a first-time home buyer? Somebody that has never owned a home, or if you owned a home in the past, as long as you haven't been on title of a property for the last 3 years, you are considered a first-time home buyer again. So this program will be for you. It's 100% financing. The program covers your down payment, 100% of the down payment, whether you're using a conventional loan or an FHA loan, and part of the closing cost. Okay. So, it does require that you take a home owner's educational course. I actually do like those a lot. It'll teach you as a homeowner or a new homeowner what the steps and how to budget better so you don't make any mistakes and you're not overextending yourself. Okay. You will pay, like Voltaire said in his presentation, there's some costs associated when you're buying a home out of pocket. So this is one of them. It's $99. You have to do it by the time you close your transaction, which is 30 days. And they'll assist you with 3% for you can use it for down payment and closing costs. And then the second assistance will be also a My Home, which will give you $10,000 or 3%, whichever is less. Our home buyers that we're seeing to put them on these, they're getting about $25,000 to $27,000 as an assistance. They can use it for down payment and part of the closing costs. Okay, so this program's called CalHFA. Take a screenshot, Google it. You guys will find a lot in the website from CalHFA. They dictate the rates, they dictate the programs. It's super simple to read, but I do invite you guys to do your own research as well.
What's the lowest credit score you could have to qualify?
Great question. 660 credit score for CalHFA right now. It was at 640. They raised it right in the middle of the pandemic. I do feel like they're going to come back down as the country starts to reopen again and things to get more stable. But right now, 660. Don't let that hold you back. If you're not at 660 and you're watching this today, we'll help you. We'll help you. I'm sorry, get there to 660. Okay. We work with a credit repair company. I've done over 1,700 home buyers, not counting the refinances, where I'll teach you. I do a credit simulator for our clients, and I punch in money. Like, what if my client invests $2,000, and it'll calculate it for me, and it'll tell me how far I can get your score, and I can just mess around with it. I can share it with you on a screen, and we can work on it together. So if you're not 660, don't let that stop you.
Yeah, and I think you would agree with me where when I say that fixing your credit is probably like the easiest thing you can do as a home buyer, because the banks look at credit, they look at income, and then they look at what your debt and assets, right? So out of those three things, credit's the easiest to fix.
Yep.
Getting a raise or your income, that's tough, right? Because you got to go hustle or make more money somehow.
Exactly.
And then paying off your debt or increasing your assets, that's hard too. It takes time. So yeah, if you guys don't have perfect credit, it's okay. Alfonso will take care of you and walk you through it.
Like Voltaire said, 70% is income. Credit, I mean, I've helped families with 100 pages of collections and bad derogatory items. I was one of them. I had a bunch. I had my credit score was like 540 after the mortgage meltdown, and I fixed it myself. So trust me, I'll coach you. I'll help you get where we gotta be. Okay. Second program is becoming my favorite program right now, and you guys will know here in a second why. It's called GSFA Open Doors. Okay. That they also have a GSFA Platinum. For today's purposes, we're going to stick to the Open Doors. This is also a state-funded program. It's not limited to area, counties, anywhere. You can buy anywhere. Okay. So the cool part about this program, it is also 100% financing. Okay. And you do not home buyer. Why is this becoming my favorite program? Because I'm dealing with a lot of families that have never owned a home, of course, but then there's a lot of young guys or girls, females, and young couples that they got married and they bought a condo, but they don't want to sell it, right? And Voltaire teaches this a lot, how to build wealth through real estate, right? So you don't have to sell it if you don't want to. If it cash flows and you can rent it out for the mortgage, don't sell it, right? But then Alfonso, I don't have money for a down payment. Well, listen, this program right here will help you with up to 6.5% of whatever you're buying, okay? And you can use it for down payment and closing costs. Here's a cool part about this thing. If you get the full 6.5% assistance, so I'm going to use this for example, $500,000 purchase, and you get 6.5% assistance, you're getting $32,500. Okay, you only need to pay back $10,000 of that money. You only 2% of the full assistance they gave you. And the more assistance you get, the higher the interest rates can be. But you can get 5.5% assistance today, July 20 something, and your interest rate's 3.625, 100% walk with no money out of pocket for your down payment. Okay. You have a question, Voltaire?
Yeah, I do. So if someone has 10,000 saved up, 20,000 saved up of their own money, and they want to put some down payment, and then can they combine it with this program or no?
Yeah, absolutely. Because this program will cover the down payment and will cover we charge 2 points to do the loan, 2% origination. So if I give them 5.5%, yeah, this and the Cal half of both, they do charge 2 points originations to do the loans. So if I help them with 5.5% assistance, and we do an FHA loan, for example, 3.5% goes for the down payment, 2% cover the origination, and they just have to cover the regular closing costs, which could be anywhere from $10,000 to $12,000, depending on whatever sales price they're looking at, right? Or if they can negotiate something else, then they can keep the money in the bank and do some renovations, whatever they got to do to the house, right? So this is a phenomenal program. I mean, we're closing probably a good 5 to 6 loans a month, every month with this program since like COVID started. It's because it allows people to buy a home with no money out of pocket for down payment, and they do not need to be a first-time home buyer, okay? And here's the kicker. Here's a plus. Program, the only down payment assistance program out there in the market that allows you to buy multi-units. Meaning you live in one, you can rent the second unit, or you buy 3 units, live in one, rent 2, buy 4 units, live in one, rent 3. Okay.
That's amazing. That's an amazing program.
So it's a great program. Now, these programs that I'm talking about right now, these are just the assistance that help you for the down payment required for an FHA loan, a conventional loan. And as we all know, VA home loans are 100% financing, but you can use it too. What if on a VA and a veteran, use the assistance to pay down to, to pay the closing cost, okay? And it's flexible income limits. So check out this. On this program, there's no income limit. No income limit. So you can earn literally $200,000 a year. If you're making that kind of money, I hope you have a little bit of savings, but if you don't, it's okay. You can buy a home with this. The CalHFA will cap you. The income limit for CalHFA is about $183,000 a year, which is still a lot of money. But this program right here, there's no income cap. The only thing there is, there's the maximum loan amount allowed is $510,000. So it makes units unless they're cheap, but you can buy a house up to $528,000, put 3.5% down, which the program will give you or lend you, and your loan is under 510. That's the only catch of this program, that the max loan amount could be $510,400, and that's for the entire state of California. Okay. So, and like I said, you're only paying like a third of the assistance you're getting. Okay. The rest is a grant. It's a gift. It's forgiven when they record your name on title on the county, which is when you get the keys. Okay.
Wow. So it's free money. So can you explain to us why these programs even exist? Why would the government give out free money like this or help people with down payment?
Yeah, I mean, the government, obviously every year there's budgets that are put out to different states, and this is one of them. Also, there's a lot of obviously wealthy people in the country, in California, that give donations and all that. So this is where all the this is where the funds come from. So I mean, they're making, believe it or not, they're making a lot of money, because these programs not only do they assist you with the down payment, but they're also the loan servicing company. And as you all know, I don't get too technical, but every single in Wall Street, right? So this company, these entities are servicing that, and they're making money on the loan servicing. So the government does it to help, income, low to moderate income. But I mean, this one right here, I mean, there's nothing about moderate income. If you can make $250,000 and you don't want to use the money, you want to leverage other people's money, here you go. This is the way to do it. So it's a phenomenal program, and I already know your mind is at, Voltaire. Your head is spinning right now, so I can see it. It's a great program. I'm telling you, it's a great program. Okay. So here's the third option. Okay. I also am certified with the city and the county loans. The city and the county loans work a little bit different. They're a little bit more conservative. These programs will require you to definitely come in with 3% of down payment. Okay. So it has to come from a relative or as a gift, from your 401k, from your own funds. This is like, you have to come in with 3%. Okay. Now, city program, they work identical. So this is for anywhere in the city of San Diego, 921 zip codes. Okay. 921 zip codes, including San Isidro. Okay. For the county, it's the unincorporated area, all of them though. But I'm talking about like down south, Bonita, Imperial Beach, Lemon Grove, La Mesa, Spring Valley, Santee. If you want to go North County, San Marcos and Vista. Del Mar too is included, but I mean, there's nothing in Del Mar that qualifies for this price points, right? But what happens here is, and the cool part about it, if you could qualify for these, is this: there is income limits. So for example, a family of 4, husband, wife, and 2 children, okay? Or just a family and 4 people in the household, the maximum income they can earn is about $92,000. If you make $1 a year over, put you a penny over a month, you disqualify. So these programs are very strict on that, okay? And I can have that in the consultation. I'll explain to you what each household is, okay? But you put 3%, the city is gonna defer a balloon payment of 17% of the sales price. They'll freeze it on the sideline, right? At a 3% simple interest a year, which is cheap money, which means that Let's just say that 17% equals $50,000 of the sales price. That $50,000 gets frozen on the sideline at a 3% simple interest, which means it's going to cost $100 a year. It's nothing. It's peanuts, right? I will then lend you only 80% of the sales price. Well, because the city and you are contributing 20%, and I'm only doing a loan for 80%, you're gonna avoid paying mortgage insurance. So, for example, if you bought a home with FHA and your mortgage payment was $2,800, that same house, if you buy it with the city, your payment's like $2,200. So you're saving about $500 on average. That on this programs, if you do qualify, the payments are cheaper. Okay, but they're specific to the area in certain parts of the county of San Diego. The other two do not are limited. It can go anywhere. And I forgot to mention this, on that GSFA Platinum, you only need a 640 credit score. On the city and the county, you only need a 640 credit score. Okay, and they will also, on top of the 17%, guys, they will assist you with 4% as a grant, free money, $10,000, whichever is less, to be used for the closing costs. It's money, because if you're a buyer, this means that you can write offers to the seller saying, hey, Mr. Seller, I'll pay you this much for your house and I don't need any assistance. I got it all covered. As long as you put 3%, all of your closing costs, and they will assist you with 17%. That's signed in second. You have to pay that money back, guys, whenever you finish paying off your house in 30 years. When you sell it on any of these properties, any of these loans, pay off the mortgage in 30 years, you sell it, you try to refinance to pull money out, they'll make you pay them off, or you move out of the home and they find out that you're no longer occupied as your primary home, you will have to pay them back. They'll call the note due, okay? How they find out, I don't know, but I know they do, okay?
First, yeah, we have a comment here. It says, wow, this guy talks a lot.
Wow.
Oh, okay. No, no, I'm joking. I'm messing with you. No, man, but this is some good stuff right here. So the thing that impressed me the most is the 27 to 2,200 bucks. And I've witnessed this firsthand, everyone. I've had clients who bought with this program, and what would have been like Alfonso said, would have been a $2,700 payment. Now they're paying $2,200. So I think that's the best part about these programs. Number one, their payment's lower. Number two, it allows you to buy a bigger house, right, Alfonso?
That is correct. That is 100%. Yep.
So with that down payment program, like that one, the city and the county, why would the city and the county give, like, let people borrow money? Is it because they want to make money, or what's the reasoning behind it?
In order for them, that's a great question, Walter. For the city and county, I know this. For what I said for the state is the same thing. For the city and county, they have to allocate federal funds for low-income families. If they do not allocate that money to help low-income families in the counties, they do not get the rest of the funding from the government. Okay.
So going back to that thing, so the previous one, the GSFA window, open doors, that's like anybody that makes whatever amount of money, doesn't matter. Yep. But so you're saying that the county and the city program, that's for low income family members.
Yep.
For families. So go ahead.
Yes.
I'll let you explain the rest.
It's the same chart that they use when people qualify for like food stamps and Section 8 and welfare, right? So they really want to is that they know that without this money, Voltaire, they will never become homeowners. Never. I mean, it'll be super hard for them to become homeowners. So that's why they're so strict, to make sure that nobody takes advantage of the program, because it could take away from other families. So like they tell us when we go to the program, like, hey, if you guys think the FBI like investigates, nothing on us. Like, we'll find out if they make more money. We'll find out if there's more people in that household, because they don't want anybody to take advantage of these funds because they're limited. They can only help like, I think 80 to 100 families a year. That's it, in all of San Diego County. So, but the payments are a lot more affordable, which is the plus.
Yeah, the last point on that one that I'll share with everyone is, I've seen people who got these programs back like in the mid 2000s, like 2005, 2006, and I've seen them sell like 10 years later, 12 years later, and they've made money. Like, I think a lot of people mistaken it were like, oh, these programs are expensive. You won't make any equity or money. But I've seen them cash out money, real money.
Absolutely. And it's not a share equity. Before these programs will be like, hey, Voltaire, I'm going to lend you the 17%. But whenever you sell it, whatever you earn, you're going to share that with me. Now it's not a share equity program. Whatever they earn, Voltaire, as long as they pay back that 17%, that's it. So
That's pretty cool.
It's all the homeowners. Okay.
Okay, great. Yeah, good info.
I don't want to talk too much because I know you then you're gonna get on my case. But
No, I was joking, man. No, really what I wanted to see your reaction. I filmed you while I said it. But you took it like a champ though. You just took it on chin, like, okay.
Got it. So I want to give people examples, okay? These are just examples. This is an FHA loan. You coming in with 3.5% of your own down payment. If you bought a home today in San Diego for $550,000, 3.5% down, rates 2.875. I'm doing average. Honestly, if you have like a perfect credit score, you're probably going to be like more like 2.6. Okay, I'm doing an average 2.8. Your mortgage payment's $32.25. So there's a lot of people paying that kind of rent in San Diego, guys. Stop paying rent. Build your own wealth. Buy your own home, especially with down payment assistance available. Okay. So this is a payment for a $550,000 home. Here's one for $500,000. Okay. Same 3.5% down payment. Now we're getting into the conforming loan limits. Okay. Any loan under $510,000 for San Diego County, it's called conforming. So matter of fact, me and Voltaire were talking this morning. The rate's like 2.3, 2.25, but I'm giving an average of 2.5. And this is like, you can get that rate even if your score is like 620, which is like low. So check this out, $500,000 house, your mortgage payment's $2,800. Voltaire, question: if somebody that's worth 500, what would the rents be like?
Like 2,800, $3,000.
Exactly. So
yeah.
I mean,
this is crazy, man.
I know. I'm telling people, like, if you're paying between $2,500 and $3,000, you got to call us. Like, you got to stop paying rent because we can make it happen with these programs. And this is your payment. This is real money. This is real data today, July 21st, I believe, of 2020. Okay. Check this one out.
Yeah, I'll put an asterisk. I'll put an asterisk on that one. Like, give us a call unless you're one of my tenants. Just continue to pay the rent. Because, but nah, man, this is pretty amazing. I'm glad you actually brought out these payments so you could actually show people, because I don't think a lot of buyers or renters out there right now really understand what's low interest rates, big deal, or whatever. But this shows you, or first time buyer programs, big deal. This shows you exactly as a renter, like, what are you doing? Stop paying the rent.
Exactly. Check this one out. Small 2-bedroom house, a 3-bedroom, 1-bath, $450, right? Here you go. $2,500 a month. Literally, guys, before COVID, the rates were 4.25%, 4.5%. The same house that I'm showing you right now, $450, your mortgage would have been like $3,000.
Yeah.
Right now it's like $450 to $500 less because of what's going on, and rates are tanking. And I'm telling you, that's with like a 620 credit score. But you call me and you have a 680 credit score, I'm locking you in like a 2.2, 2.3. Okay. And I mean, the payment's gonna change like $40, $50, but hey, everything counts. Okay.
That's pretty impressive on that. If you go back that slide one, no, the 450 one. There's a house that I have, the tenant's paying me on the 2-bedroom house, $2,650 in rent. Now, a few doors down, there's a house for sale. It was for sale for $425. So he could have bought that house for $425. Instead of paying me rent at $2,650, his payment probably would have been like $2,450 or something, I'm assuming.
Exactly. And
he could have lived in the same neighborhood, same size house. Actually, the one down the street was bigger. It was a one extra bedroom. So I think, I'm giving that illustration as an example because as renters, tenants, we don't think about that stuff. You could have been an owner paying less, but hey, I got him locked in as a tenant. I'm not complaining, but I'm just giving an illustration as to let's open up our minds, you know, and open up our eyes and look at what's happening in this market and take advantage of the opportunities out there.
Yeah. Now check this one out. This is a 500,000 regular FHA. Take a picture of that, 2835. Okay. Same house, 500,000 with the city program. Look at that, 2222. I'd say you what,
Wow.
$600 a month, right?
I'm taking a photo of that.
Yep.
That's crazy.
Yep. And those rates that you're watching, that you're seeing there are legit. Okay. I priced those out today. So $500,000 house, you have to put 3%, which is $15,000. You have to come in with that money. Okay. But you can buy a house. They'll assist you with 17% and 10 grand for your closing costs. And that's your mortgage payment. Okay. So I'm telling you, there's no reason why you should literally stay paying rent beyond 2020 this year. I don't think we'll ever, I'm almost 40 years old. I know I look older, Voltaire. Okay. But I'll be 40 next year.
I'm glad you said it, because I didn't want to call you out.
But listen, I really don't think in my time, we'll ever see rates as low as there are today. Here's a $450,000 house, guys. Look at this, 2255 regular FHA, 2552. Check this one out, 1999.
Wow.
It almost feels like I'm going to the 99 cent store, like $199.99, right? 1999. That is your monthly mortgage payment using the city or county loans. Okay, so I mean, it's unbelievable what the market's doing right now. I'll leave you guys with this. If you feel like, if you're still working, unemployed, and COVID hasn't really affected you, and you're paying north of $2,500 a month in rent, you got to pick up the phone and schedule your consultation. We're doing consultations via Zoom like we're doing this today. They're 100% free. 45 minutes. We'll pull your credit. We'll talk about your current situation. We'll give you all your loan options. And if you need to work on your credit score, don't worry about it. I'll tell you one thing too. I'm not going to judge you. I owed a lot of collections. My credit was under 500. Okay. So who am I to judge you guys? Just give us an opportunity. Help us pass out this information. I hope that you guys liked what I presented today. And I'm open for any questions, brother.
Yeah, no, this is awesome, man. I really liked your presentation. Obviously one thing that wasn't covered was, regular loans, conventional and things like that. But just know that whatever type of financial situation you're in, credit situation you're in, there's probably something for you. And it's so unbelievably low what's affordable. That's the word I'm looking for. It's so affordable right now that, like Alfonso said, he doesn't think he's ever going to see it in his lifetime. I don't think I'm ever going to see it in my lifetime. And it's one of these things that everyone looks back at the bubble, 2008, 2009, 10, 11, 12, and they're kicking themselves in the butt. Like, man, I should have paid attention. I should have bought. I should have done this. I should have done that. Again, right now, it's a really good time to invest in a 30-year fixed mortgage. And I'm doing it myself. I don't know if you had jumped on already at that point in time when I was talking about that, Alfonso, but I told everybody that, I'm looking at my portfolio and it's like, it's time to invest in the mortgage 30-year fixed. I'm going to be doing it myself. So thanks for all that information. Does anyone have any questions before we wrap this up? Anything? Credit. It could be about credit. It could be about
any questions,
payments or anything.
And, the city programs are conventional, but I'll put for next time, once Voltaire invites me back, I'll put a 3% down conventional option for you guys to have it out there too. But yeah, I don't think I'll ever see it. I mean, if people would have told me, Voltaire, 6 months ago, rates are going to be in the twos, I'd be like, you're crazy. There's no way. I mean, there's no way. I mean, I remember they hit 2.8 right before COVID, and then boom, they shot back up.
Yeah, I remember that.
Before March of this year, in 17 years, over 2,000 mortgages I've written. I've only done one loan, and that was in 2012 when it was about to recover from the recession. I did one loan at 2.875 because they were available for like 1 hour for one day. But this is unbelievable. I mean, 30-year first mortgage, just make the minimum payment. Like, don't even pay more towards a mortgage if you don't have to. Like, save more money and leverage and build your real estate portfolio like, Voltaire has done over the last years, so it's a great time. I mean, I don't think we'll ever see this in my time. I don't think I'll ever see it. And rates, guys, I follow a guy named Barry Habib. If you guys want to follow him, Barry Habib, he's like a freaking mortgage guy guru, written mortgages for 30 years, been around for like 40 plus years. He says the rates will stay as low as they are today until right about January of next year, right after, right before elections. So take advantage. Call us today, free consults. If we have to fix your credit, you got time. I don't care how bad your credit could be. We can help you fix it in 3 to 4. You could be in your home by like Christmas or January of next year.
Cool, man. Yeah, no, I agree with everything you just said. If anyone's out there wants has some questions or concerns, reach out to Alfonso, reach out to your favorite Lepe Tendwell real estate agent, and then we'll get you all the answers that you need. Thanks a lot for your time, Alfonso. See you guys, everybody. Enjoy your night. We'll talk soon. See ya.